You're all very welcome to Practice News this morning on the 8th of April 2022. Practice News is news for members in practice. So we'll have a packed show today, so we'll get straight into it. Our headlines today, there is a new set of audit regulations out. There's going to be separate regulations now for ROI and UK. So that's the big decision that you have to take if you are in practice as to whether you should have ROI or UK, which will be driven by your location, or both. If you have clients in both jurisdictions, you may choose to have audit registration in both jurisdictions. So I know Jeremy's going to talk to you in more detail about that. There's also new Institute Anti-Money Laundering guidance for the Republic of Ireland put out there. So there's a lot of guidance in that, especially about when to report and how to report. So that is absolutely something that you're going to have to get your head around, because anti-money laundering regulation affects everybody in practice. The terrible crisis in Ukraine continues. From a practice point of view, obviously we support the people of Ukraine, but in terms of what you need to understand, you need to understand about the sanctions. So we're going to cover that. We're going to cover the suite of supports that we have out there for you in practice. A lot happening in the tax world, debt warehousing, and the stringent rules that are there for non-resident landlords in the Republic of Ireland. So Crona is going to give us our update on that. Investment business. I think it's fair to say there's been a fair bit of change over the past few years in the regulations that cover what you can and cannot carry out. But also, I mean, obviously that the upheavals in the world in the past few years have also meant that major changes in what somebody with money to invest should invest in. So we're delighted to have our sponsor, Acuvest, here today. Damien Cooper is representing our sponsor. I'll give you a proper introduction now in a minute, Damien. But we're delighted that we're going to cover that area and run through what you can do and what you should do. So that's fine. Also, ethics in practice. There's been a new set of CCAB suite of case studies published, which is the news item. But it's always good to talk about ethics. Ethics is always the cornerstone of what we are as professionals. So we're delighted to be able to cover that again and to focus in on that in this edition of Practice News. So that is our headlines today. As I say, we're delighted to have a sponsor today, Acuvest. It's great to be able to have a sponsor and to be able to improve the quality of what we can deliver to you. Now, an all-star cast today helping us to do this. Couldn't do it by ourselves. So we're delighted to have Crona Clohessy, the Institute's Tax and Public Policy Lead, to talk to us about Republic of Ireland's tax. So delighted to have Crona on that, and also to welcome back Neil Fitzgerald. Neil, as anybody in practice will remember, Neil, who was a stalwart of practice consulting for a number of years. So we're delighted to have Neil back to talk to us about ethics and governance. Neil is now head of ethics and governance in the Institute, as I say, cornerstone of what we're all about here. So he is also going to be joined in that discussion by Jeremy, but also by Karen Flannery, head of projects in professional standards. And one of the projects that Karen was responsible for was the current code of ethics. So I'm really looking forward to that discussion about that topic. So you're both very, very welcome. We also towards the end of the session, we've got a recording by Leontia Doran, our UK tax specialist, of a UK, just recorded in the past couple of days on the current UK tax developments. So we're going to broadcast that at the end of the show now. So that is ourselves, and of course myself and Jeremy, as per usual, delivering this. Jeremy, of course, putting the whole thing together, just trying to make me look good, really. That's what he's about here. Now, so there we go. And as I say, we are also delighted to have Damien Cooper from Acuvest on. Damien is head of investments and private clients. Acuvest now. Acuvest is all about. Let me just. It's an Irish company, and it's an independent wealth and investment advisory firm, and they advise pension schemes, individuals, companies, and charities. That's what they do. So I said, I should have Damien on. We're going to have a discussion about investment business on later. As always with these discussions, we would like to reflect back to you as to who you are. So that is the demographics today. You can look at it yourself, mainly FCAs, mainly senior people, members in practice in the main, as you would expect, it being practice news. 86%, 11% split, ROI and NI, 45 median age group, 40-60 male female, and there's an indication as to where you come from on the map. There we go, that's who you are. As always, as I say, we're going to cover especially, the areas around, pretty much all the technical areas we're going to cover today. And there's a lot of technical areas. We're going to be covering them at breakneck speed, because this is just news. And a lot of the stuff we say, and I'm particularly thinking about the update I'm going to give about investment business, it really is top line stuff. So please do not rely on this thing. It's all about consciousness raising, pointing you towards the questions that you should be asking, as opposed to placing any sort of reliance really on these slides or this presentation as such. So it really does come with a fairly heavy disclaimer. So now I want to move over to our practice update, which is going to be delivered to you in the main by Jeremy. I just want to make a quick note, first of all, that the latest edition of Practice Matters is out. Okay, headlined by Neil. With a discussion about ethics, and it's an article about ethics, I should say. So if you have not received Practice Matters, please look into it. You should have, if you go into the My Account area of the Institute's website, you should update your settings to make sure that you're getting consulting emails. But anyway, there you go. It is out, and this is what it is all about. So now I'm going to hand you over to Jeremy to give you an update in some areas that are important to you at the moment. Over to you.
Donald, thank you very, very much for that introduction. Yeah, as ever, kicking off Practice News, I'm just going to give you some technical updates that we actually have taken from this edition of Practice Matters. We have a few stories here today, but they're really going to concentrate in on two areas: audit and anti-money laundering. So, Conal, if you can click ahead there to the audit and the next slide again. And yeah, my first news story with relation to audit is with relation to the new audit regulations, which you mentioned, Conal. And these are hot off the press this week, actually just issued on last Wednesday, the 6th of April. Now, these are actually specifically just for the Republic of Ireland since Brexit, and since January 21, there's been two audit regulations, one for the UK and one for Ireland, of course, brought about by Brexit. So this is the first distinct set of Irish regulations that has been purely developed by the Institute for Ireland. ICAW and ICAS are no longer recognised accountancy bodies in Ireland since their request back in last year. So that's one thing, and these actual regulations replace the actual last set that would have been in force from January 2020. Now, what are the key changes with relation to the regulations? Number of things here, and of course, been a new set of regulations that are just Irish specific. They have allowed the simple things just to make the regulations more easier to read. They're tailored for specific jurisdictions, so less confusion between the two jurisdictions, and of course, to help them improve on clarity and completeness as well. Now, there's two key features, though, of these regulations. One is with relation to, I'm sure you've heard me before on Practice News, if you're a regular attendee, talking about the new IASA requirements with relation to CPD if you're an RI on the Irish Audit Register. Basically, from 1 January 22, they're now in force. You're going to need, if you're on the Irish Audit Register, to show that you're doing specific Irish-related financial reporting, company law, and audit framework training. Talk more about that in the coming slides. Now, the next thing here that has been incorporated as well into the audit regulations, something I highlighted in Practice News late last year, is with relation to the alternate requirements for sole practitioners. If you're an existing sole practitioner who has doing audits as an RI, you have 1 year from these effective dates. So we basically have until 6 April 23 to get an alternate and to actually advise professional standards of the alternate. So your alternate obviously should be somebody who is also an RI. I was just actually talking to a gentleman in the west of Ireland just today, just this morning actually, and he was just setting up his practice, and he was looking to get an alternate, and he had found somebody he went to college with. So basically this is something that you do need to put in place, and if you're we're giving a year's time frame for you to actually put this in place, but just to be aware of that for existing practitioners, and of course anybody new setting up a firm or becoming an RI with their own firm will actually have to already put their alternate in place from now. Some other small changes as well in the audit regulations, of course. In the Irish audit regulations, they don't have as much reference to ICAW and to ICAS anymore, apart from around the qualification and so on. So Conal, that is the new audit regulations. If you can click ahead again to the next slide, just I suppose a couple more points on this. As I said, we now have 2 sets of audit regulations. You have links there, and it's very important as ever that these slides to go off and download the applicable regulations for you. And as Conal mentioned, we cover these points in very high level here, so a lot of homework for you to do. But if you're actually in the Republic of Ireland and you have clients in the UK, obviously you do audits for those clients applicable to the UK audit regulations. And of course, if you're based in the UK as well. So you can see here now with Brexit, there's going to be over time a divergence in regulations, and it's going to be a lot more CPD and requirements for you to stay on top of. Now, to help you in this regard, the Institute has prepared an information document, and this has been issued as well just in recent days with the new regulations, comparing what are the differences between the UK and the Irish regulations as they stand. Very, very useful document. I would say to you to download this. Now, Conal mentioned as well there that, of course, and I've mentioned before too in previous practice news, that we have offered the option, and Professional Standards still offers the option, that if you don't wish going forward, or if you don't have clients in the opposite jurisdiction, so you're based in Northern Ireland, you have no ROI clients, and you don't wish to remain going forward into the actual, in the Irish audit register, you can nominate the Professional Standards. You just will remain registered to do audits in the UK, and you won't need to comply with these CPD requirements and the other requirements going forward. So please be aware that option is still there. And of course, matching in the CPD regulations of the Institute were updated as well on Wednesday, and they have the RI CPD changes. I'm going to talk about more detail in a minute, but also some AML CPD requirements as well built in there. So please download a copy of that as well and be familiar with it. Conal, if you can click ahead again. The next thing here is with relation to the IASA CPD requirements. So this is basically what's brought about a lot of these changes in the audit regulations this April. So you'll recall I mentioned that in February 21, IASA put out these guidelines. The Institute would have fed that its own comments and thoughts on that over the spring and summer months of 2021. But these guidelines took effect from 1 January 22. And basically in this, it sets out requirements, as I mentioned, for RIs that they have to do now going forward if you're on the Irish Audit Register specific, and to be able to show specific training that you've completed in audit, in company law, and in financial reporting for the Republic of Ireland. Also as well, you will be required as an RI to undertake and give a declaration back to the Institute each year that you have undertaken this training, and it'll become part of the monitoring visits to check that you have done the training as well. So you can see a lot of new requirements being brought on you here. Conal, if you can click ahead again, the next slide just relates here to what exactly you require. Yes, you're to, if you wish to, as I say, remain in the Irish Audit Register, and it applies to all RIs. So there isn't an out if you tell me that you don't, you're based in Northern Ireland, but you presently don't have any audit clients in the Republic. No, you still have to do the training. You still have to be up to speed. And that if you did take on a client, that you actually have it there. Or if you're on a career break or anything like that, that isn't an out either. If you're on the Irish Audit Register, no matter what your level of activity, you have to do this actual training. Again here, the whole idea is that you'll meet the learning outcomes of IES 8 as well. So what I would reiterate to you here, very simply here today, is if this is something you haven't thought about very much, I would say to you, and particularly if you're in Northern Ireland, UK, and you're still on the Irish Audit Register, to make sure that you're building into your CPD plans going forward how you're going to get this Irish specific training. And if you have decided, and if you're still thinking that this mightn't be for me, that I won't have any clients in the Republic of Ireland going forward, you can nominate to Professional Standards so you just wish to remain a single jurisdiction on the Audit Register. So that's that one, Conal. If you can click ahead again. Next updates are on money laundering. And the first thing on money laundering relates to a very big guidance document, updated guidance document that was put out just by CCAB, including, so that's all the Irish accountancy bodies, including our own institute. just in early March, and it's technical release 0119, an updated version. You can get it at the link there. It's well over 100 pages. And basically what it is for the Republic of Ireland, obviously you all know that the 5th Anti-Money Laundering Directive was brought into legislation just about a year ago now. It's the guidance that will actually, to update the guidance for the changes both in the 4th and the 5th directive over the last 2 or 3 years. The technical release was last put out in, I think, early 19, so about 3 years old now, so it wouldn't have the 4th, and at the 5th, it wouldn't have any of that in there. What are the key changes? The key changes are, of course, it's to help you, to give you better guidance on how to meet the new requirements, particularly around the 5th, and particularly around new things that have come in. So obviously the RBO and registered beneficial ownership came into play in 19 into 20, and a lot of different requirements there, both internal and the central register as well. So how to actually better guidance on how to ensure that your clients and you meet your obligations in this area. But also key in this as well is to help you. And you will recall I've had representatives from Garda Síochána, but also from PSNI Northern Ireland to help you and with relation to if you had to make a suspicious transaction report. So there's better guidance in there now compared to the old version with relation to the Financial Intelligence Unit guidance, but also how to make a report on the Garda Go AML system. Again, there's also some specific FAQs that are real life examples on how to make a report and how to change an STR as well. Again, as you will recall, if you attended our sessions back last year with Detective Chief Superintendent Patrick Lorden, Garda Síochána has outlined that there's very little compared to the numbers, maybe less than 1 in 10 of firms and accountancy firms in Ireland registered even on the Go AML system. So it's to help you to get up to speed with that. And if you did have to make a suspicious transaction report, that there's guidance there for you. If you're based in the UK, obviously you have a bit different requirements there. The CCBA guidance that was issued in September 2020, still in draft format, needing Treasury approval, that is still applicable, and you can get it at the link there. If you can click ahead again. And my next thing here is one that's very easily missed. It's the EU and UK listings of high-risk countries for money laundering purposes. And basically, starting with the UK listing, just actually in, I think it was on St. Patrick's Day, it came out, but actually beginning from the 29th of March, so just the last week, there is a new listing of UK high-risk countries. And so these are the countries, 25 in total, where you, if you have clients or connected to these countries, you have to do enhanced due diligence when taking on these clients under the Money Laundering Regulation 17. It's applicable for all Northern Irish and British-based accountants, this listing, and it has some new additions this time that might surprise you. Very prominent country, the United Arab Emirates, included this time. And there have been previous updates. The UK has been required since Brexit to have its own listing, so since early 21. And so it has 3 updates actually since July. And in previous updates, they also included EU member Malta, and also a very prominent country, of course, as well, Turkey. So some of you might have clients, if you're based in Northern Ireland, the UK, from these countries. Just to say to you as well, the EU listing for if you're based in the Republic of Ireland, that listing that you have to live by, that has also been updated in recent weeks. It also has 25 countries on it, but only 21 of them are actually shared with the UK listing. The 3 countries I listed above actually aren't on the EU listing, but there's other ones as well. So whatever your jurisdiction, be up to date with what the listing is and be applying it in relation to your enhanced due diligence that you're actually doing for your clients. That's AML, and I suppose the connected topic is with relation to my next slide, Conal, the Ukraine crisis. And I'm sure, like myself, all of you here today have been horrified by the scenes that we're seeing in the Ukraine over the last 6 weeks. Again, it's very important to reiterate, as Conal mentioned earlier, all members of the Institute, but particularly those in practice, we all have a vital role to play, and indeed obligations to ensure in our own way the enforcing of the sanctions that our governments have put in place against Russia, against Belarus, and against people and entities connected from these countries. Now, there's so much change in this. I think actually just this week we have the 5th set of, for instance, of European sanctions, EU sanctions. So to help you, the Institute has actually put together a resource page in this area. And this resource page, with the idea is to centralize all the connected sanctions and other information together on the page. So it goes into everything from the ethical considerations, the list of sanctions, and the sanctions come from the European Union and the UN for the Republic of Ireland, and also from the UK government if you're based in Northern Ireland and the UK. Now, that is all there in that resource page at the link there. What I would say to you, some of the key documents here are the CCAB joint statements that came out in early March for the UK members and for the Irish members. And they go into, I suppose, helping you to what sometimes can be very technical guidance to break down what are your ethical considerations in this area, but also linked to the appropriate sanctions for your country, but also as well, what are your reporting requirements if you do happen to come across potential question marks on non-compliance with sanctions. Again, as I say, the resource page covers a lot of guidance, some very technical, but also some quite good high-level stuff from the Irish Central Bank, who would be the reporting authority for non-compliance sanctions for the Republic of Ireland, the Department of Enterprise for trade sanctions, and also as well the European Union and the UK government. If there was one thing I was to say to everybody here today, and some of you might say, being in a small practice, this mightn't be a great concern for me. I probably don't, you might say, have any clients that could be connected to Russia or to Belarus. I would say to everybody, it is still very important that you familiarize yourself with the sanctions and with the requirements, but also it's an opportune time to go through your client base again, to do your risk assessments and to actually do your due diligence. You may, and you may not know that there could be clients, as I say to you, that have some involvement, some ownership or whatever else in clients, and then you need to assess this and make decisions going forward. So please don't ignore and think this is just for big firms or whatever like that. Everybody has a part to play, and that's very important. One final thing, Neil has actually completed, as well as the head of ethics and governance, a very good article on this area. Again, it covers everything from the such things around the ethics viewpoint, from fundraising, the use of social media, and whistleblowing as well. So a very, very good article. Conal, and I know a little bit over time, have we any questions from that whirlwind tour that I gave there?
We've got a fair few questions. One about IB, which we will cover. Sole director incorporated firm, what's the alternate requirements? If you are auditing and you're a sole director of a incorporated firm, yes, you need an alternate in those circumstances in ROI. Can you submit a suspicious transaction report for next client? Yes, you can, if the information came to you in the course of your professional work. Yes, you can and should. It doesn't have to be a client. The one thing I would say about submitting suspicious transactions reports via the revenue ROS site, obviously you got to follow in ROI, you got to follow up the GoAML with a ROS report. Do not do it do not set it up as a service to the client. Do it in your own right. That's very important. Never ever set it up, even though you can. But never ever do that, setting up ROS, AML reporting in ROS as a client service. Okay, what's the position with the AML toolkit? We are updating that one continuously. We would have preloaded with some of the things that are in these that are in this guidance, but we obviously need to look again to see if there's any further updates. It's the AML toolkit is a licensed product now, so we update it as we go along. So that's the position there. Dormant Irish company with a Russian resident RBO, can we continue to act for that? Look, that's quite a legalistic question. This is a legalistic area. I don't know the answer to that. Jeremy, do you know the answer to that?
Yeah, again, on that one, as I say to you, you would actually have to get specific advice. Again, it would all come down to your own assessment and your own knowledge in relation to even the industry and that they're in and their source of their wealth. Have they, I suppose, from a common sense point of view, do you know, has this actual individual any connections potentially to the Russian regime, to military, to anything that's going on there? So it's not as simple as saying, no, I won't deal with any all Russian clients or anything like this. You do have to go through it and seek legal advice as well. So hopefully that'll help you. There's a little bit of digging and a little bit of even potentially maybe going into more detail than you might have had before on the source of their wealth and just the nature even of their operations that you're dealing with in their company, but also on their wider activities, as are they involved in anything that would have any sort of a military connection to Belarus or to Russia.
Yeah, or with technology that could be used in a military capacity. There isn't actually a blanket ban on dealing with Russian clients, I suppose, is the point at the moment, as I understand it. All right, we better move on because we will indeed,
Conal. Thank you for that. As I say to you, listen, moving on to our next section, I'm delighted to be joined here again by Crona. I'm sure many of you are familiar with Crona. She's been a regular attendee over the years on Practice News, firstly from the Brexit viewpoint and now from the tax viewpoint. And listen, Crona, it's been a very busy couple of months, I know, with relation to everything from the overhang still, I suppose I could say, from COVID-19, supports, debt warehousing, but also I think revenue are getting back to some of their normal activities as well, like bulk reviews and so on. But listen, I won't say any more. I'm going to hand over to you. Off you go.
Thank you, Jeremy, and good morning, everyone. Yeah, I suppose it's fair to say that work, I suppose, in the tax sphere has really ramped up in recent months as we see the COVID support schemes, I suppose, decline. But look, there is still some I suppose overspill from that, and that's one of the first areas I'm going to cover today. So we have been meeting with revenue through our normal TALC forums. So those TALC meetings have all kicked off. So we've met, I think, across all the TALC meetings. We have a number of meetings later this month as well. So I just wanted to give you, I suppose, just highlight 5 or 6 issues that have, I suppose, come to our attention and things that we're continuing to lobby on behalf of members. So the first thing is the debt warehousing scheme. So debt warehousing has been a facility, I guess, for businesses who've been not been in a position to keep up to date with their tax liabilities, to park that tax debt for a certain period of time at a no interest rate, essentially. So revenue have started writing now to taxpayers, I suppose, to tell them what debt has been parked, for what period and for what tax heads. But what they're also asking is that any businesses that have outstanding tax returns, those tax returns now need to be filed by the end of this month. So if I just take a step back on this, I suppose that the whole benefit of debt warehousing scheme was on the assumption that businesses kept up to date with their compliance, but obviously there's been situations when that hasn't been possible. So what revenue are doing, that they're dividing, I suppose, businesses into 4 cohorts. So there's 4 types of letters issuing. Now, just to say, those letters are only issuing to the taxpayers. They're not issuing to the agents, unfortunately. Some are issuing via Ross. I think 40% are issuing by Ross, 60% by post. We have had members get in touch with us to say that some of their clients have passed on the correspondence, others have correspondence hasn't been received. So if I just step back just a little bit before I just get into the I suppose the institute lobbying in this particular area, because we do feel that revenue are a little bit late in this correspondence, just I suppose bring it back and say, look, there are 4 different types of situations here. And you'll find all of these explained in our tax news, and we try to cover this as much as possible every Monday. There will be businesses that have everything up to date and their warehouse period is ended on the 31st of December 2021. So just to say, for those businesses, the revenue letter will tell them that there's nothing that they need to do. Everything is up to date. You do not have, your debt has been parked until the end of this year on a 0% basis, and revenue will be in contact later on in the year to I suppose, to arrange payment because the rate of interest for 3% will kick in. There's also the businesses that have been impacted by the pandemic, the restrictions that were announced in December. They do have an extension to the 30th of April. So the exact same thing applies, but they are able to park their debt on an interest-free basis until April 2023. So they get an extra 3 months. But that is all predicated on the fact that you need to continue to file your tax returns and pay your liabilities from May 2022 onwards. Now, there are another cohort of taxpayers who do have outstanding tax returns, and they will either have their debt warehousing period come to an end on the 31st of December 2022 or 2021, sorry, or the 30th of April 2022, as I just went through. Revenue are now saying that in order to continue the benefits of the debt warehousing scheme, that cohort of taxpayer must have all outstanding tax returns filed by the end of this month. And that includes the January to March 2022 returns. So we had a meeting with Revenue about a month ago about this, and they had noted that they were going to write to taxpayers, which we welcomed, because I think there was a lot of confusion as to what debt was being parked for what tax period and what returns were outstanding. So the fact that Revenue were able to quantify and show taxpayers what returns were outstanding, that's very welcome. But we do feel the deadline, putting a deadline of a 30th of April, puts not just pressure on the business, but very much pressure on the agent, and we have had a lot of member feedback in that area. So just to say that we did write to Revenue this week, because I think Joe Hiley, the Collector General, put a press release out last week saying that in the coming days, Revenue will be writing to advise businesses off this requirement to file returns, and that if you didn't file your return, you would automatically, the debt would automatically become due, and if you weren't able to pay it, 8% interest would apply. So it's quite stark. So we did write a letter, and we'll be covering it in e-news today and tax news on Monday. It's on our website as well. We've just expressed concern, where we recognise the benefits of the scheme and the requirement to file the outstanding returns. I just think it just puts an awful lot of pressure on agents. If you're only getting a letter maybe this week or next week, Easter holidays obviously are coming into play as well. The fact is, agents don't get a copy of their correspondence, as I said, which is a big issue. 60% of the letters are being delivered by An Post, and we know we've all experienced delays due to the pandemic and other reasons. So it could take a week or two for the letter actually to arrive, and when it does arrive, it might not be passed on by the business to the agent. The other thing so one member got in touch to say that they did get the correspondence and that Revenue were looking for VAT return of trading details and Form 46Gs right back as far as 2015. And again, I think that's a little bit of an overreach. These are statistical returns. They don't really have anything to do with actual tax liabilities. Now, I won't get into the rules around that, but we really feel that that's a little bit of an overreach. And also, I suppose the last point we made in our correspondence was that the debt warehousing scheme has been extended and amended so many times. There is a level of confusion out there as to what deadline applies to what taxpayer. So just to say, we have made that representation to the Revenue Commissioners. We've reached out for a meeting to chat through the deadline. We are hoping that there will be an extension, but for now, that deadline applies. I suppose the advice is to try and get the returns in as far as possible, as much as possible. And I know that is it's quite significant. So that is that on debt warehousing. Apologies now for being so negative, but that, I just feel it's a little bit of an overreach to expect agents to be, in a position by the end of the month to have all returns filed. So that's been, I suppose, occupying our time this week. There's been another few things that have come up, I suppose, on Main Talc. And just to say, on non-resident landlords. So the strict, I suppose, legislative position here has been that if you are a non-resident landlord and you've got Irish property that you rent out, you are really supposed to appoint an agent to collect the rents on your behalf, or ask your tenant and account for the tax, or ask your tenant to withhold income tax on the rents before they pay it over. So there's no essentially loss of tax for the exchequer. Now, over the years, I suppose a practice has developed whereby non-resident landlords have, maybe not done that and have just been receiving the rent themselves and declaring their rental income and paying their tax over. So that was all fine until 2020 income tax returns were due to be filed, and Revenue made a change on the Form 11. It was impossible to bypass the screen where you had to tick which option you'd chosen. So lobbying by ourselves, CCABI, and we got a workaround for 2020 tax returns, which meant you could tick a box to say you'd done it, but you actually hadn't done it, and you could file the income tax return as normal. So that was maybe decided around March or April last year. So the same issue is now cropping up for 2021 tax returns. And we brought this to Revenue's attention at the end of February. We just said, look, this is the same issue. When you arrange this workaround or fix, and we were quite late into 2021, and a lot of landlords wouldn't have been aware that they would have had to appoint an agent or ask a tenant to withhold tax from the start of the year. And often there's a case is that your contact with your agent even is only when you go to file your tax return. So it could have been November by the time you realise that you were actually not abiding by the strict legislative position. Now, Revenue really weren't hearing any of it. They said that this has been around, this is the strict legislative position, and while we appreciate that, we did make the case that it's quite late in the year to be saying now you should have had something in place for 2021. So we envisage that there is going to be a problem filing tax returns in 2021. So what Revenue have said is that to take on board our point, they still will apply the same strict legislative basis. They're not going to put a workaround for all and sundry, but what they are willing to do is if there are specific cases that are having difficulty, to contact them by My Inquiries, and they'll try and sort it out that way to enable the Ross income tax return to be filed. Now, I suppose just on that, I suppose when you think of a non-resident landlord, you might think of someone that has a huge portfolio of property. Like, we know that there are accidental landlords. There are cases here where the income tax liability may be minimal or even non-existent, especially if the property is highly mortgaged. And we know the cost and administrative burden of actually having to appoint a collection agent, especially if you're only a one-man show, essentially. So we are going to make representation on that, maybe to lobby for some sort of legislative change in our pre-budget submission. But talks are ongoing with Revenue on that issue. But we do welcome, we have had a lot of members feed into us on this particular issue. So if anyone is having any difficulties or any suggestions, please do email tax@chargeaccounts.ie. We're very, very happy to hear from you and represent on your behalf. And I see something coming into the chat. Yeah, collection agents are now quoting considerable amount for the service, which adds to the point that it is very administratively and costly, particularly if you are a one property, you go abroad for a year or you find yourself an accidental landlord. So it's very, very tough. Revenue's line, unfortunately, is that's the legislation. So That's on that point. Conscious of time now as well, so just have a couple of other very short updates. Just to note, and you're probably all aware, Revenue have begun issuing letters in terms of RCT bulk rate review. Now, this hasn't happened, I think, since September 19 was the last bulk rate review. So I think around the middle of March they issued letters to customers in the business division. They had done a preliminary review and they'd mentioned it to us at TALC, and they've identified around 17,000 cases that might see an increase in their RCT rate from 20 to 35%. So look, just to say that the letters that have issued should include detail of why a potential rate increase is warranted. But I suppose Revenue have cautioned that if you don't take any action, if the subcontractor doesn't take any action in advance of the live bulk rate review in April, then the deduction rates will be increased following that bulk rate review this month. So I suppose just to say that if you have gotten a letter, maybe have a look and see, is there anything you need to do. Okay, so just to highlight that again, we'll keep members up to date on tax news. The other thing, I suppose this arose out of, it's quite an interesting one as well. You know, businesses being required to close because of COVID, and whether this impacts the ability to claim retirement relief. So we brought this to Revenue's attention because retirement relief, I suppose, is based on the premise that you're selling a live and an operational or trading business. And I suppose COVID, you know, particularly for those businesses in the hospitality sector, there has been a long period of closure, and maybe, you know, families or businesses are looking to I suppose, move property on or transfer to the next generation. And one thing that came to our attention was whether Revenue would accept the period of closure for COVID related purposes as, I suppose, a period that you could ignore and then still apply the retirement relief provisions. Now, there is in the guidance, the legislation, you know, just talks about a trading business, but in the guidance, Revenue do note that a short period of closure is allowed once it's immediately followed by a sale. So Revenue had said they haven't had too many queries on this. Now, I would envisage that's because maybe the transactions haven't started. But what they did say is that they're going to consider the level of queries that they will receive on this. They feel that the period of closure for COVID shouldn't impact a retirement relief claim, and they will perhaps update the guidance to clarify that point if there is a need. Now, the guidance on retirement relief had been down for the last few weeks, it's been down on the website for updating, and I did spot that it had been updated just this last month, March 2022, so it's back live. Now, there isn't any reference to COVID in that, but I suppose just on as an aside point, a lot of the guidance on CGT in particular, you've probably noticed a lot of the TDMs are down for updating. We brought this to Revenue's attention as well, and what they said was, you know, they're required by policy to update their guidance every few years, and while that's fine and that's a correct approach, we did ask that they don't take down the existing guidance for weeks on end, because we know how reliable or how reliant practitioners are on those guidance. We did make the case to say, could you leave the old guidance up there while you're updating the new, because a lot of the time there's no major change to the guidance, it's just that they're reviewing it to ensure that it's still up to date with, you know, Finance Act changes, etc. So we have made that case because it is, even I find it frustrating, you know, going to try and look for a guide and it's not there. So just to make that point, that we have made that point, and you know, I'd be interested if anyone has had problems, you know, when they need to read something and it's not there. It can be quite annoying. The last point I'm going to just mention is this whole area of EPSWT, so this is professional services withholding tax, and I am aware that there's a lot of practitioners that have had problems with this, particularly when the EPSWT system has become live. So just to give a very brief background on this, this is a situation where you have a doctor that's employed by a practice and they have GMS income. So the HSC is paying income to the, let's say, practice for treating a patient, but the contract that the HSC enters into is between the HSC and the practicing doctor, not the practice. So the practice, while is, you know, and obviously the doctor is employed by the practice, paid a salary, the income that it earns from that patient is assessable on the practice, but the PSWT credit is actually being given to the employee by the HSC because they only recognise a contract between them and the practicing doctor, not the practice. So you have a situation now where, and it's always really been there, is that, the doctor's practice is assessed on the income, but the credit is sitting in the hands of the employee, and the practice doesn't have any opportunity to claim it, and then it could be double taxed essentially. So this was fine when the Form 45s and paper returns were flying around, but now since July last year, where it's all on ROS, so it's very difficult for the practice to get their hands on, the credit that the employee has. So I know there are workarounds currently going on. I've spoken to members in practice on this. We made a submission. We made a submission last year on this, and we talked to Revenue in February again about it. They said they cannot figure out how to, I suppose, update the ROS system to reflect this reality. They did note the recent Tax Appeal Commission determination, which I suppose copper fasted the fact that the GMS contract does follow the treating doctor, which I guess, it is something that we knew, but I suppose doesn't help the case here. So just to say that they haven't come up with a solution for it. Now we are writing a submission actually at the moment to them with some ideas as to how to get around it, like whereby even, on the employing doctor's record on ROS, perhaps there could be a box to say they're entitled to the EPSWT, and in some way that statement could be sent across to the employer or something. So we're trying to come up with ideas. So if anyone has any ideas, they'd be very welcome on tax@charteredaccounts.ie. It's really one of these things that it's causing extreme difficulties, especially for agents who deal. I know there's lots of agents who deal with lots of doctors. So just to say, if you have any solutions or any ideas, please don't be shy. Now I know I'm probably on my last 30 seconds, Jeremy, but the last thing I just wanted to mention very, very quickly is I spoke last time about the new Revenue Code of Practice for Compliance Interventions. Just to say, we are having a 1-hour webinar on the 5th of May at 2 p.m. It's free for members. Revenue are going to come in to speak to us about the new code because it is becoming effective from the 1st of May. So just to say, please go onto our CPD website and sign up for that event. We've a lot of members signed up already. I think it will be a great event just to give you a bit of an insight into the new code. So that is a whistle-top tour of what is happening on the ROI tax front. So happy to take any questions if there are some now.
Crona, thank you very, very much. It was a very, very comprehensive overview of the tax environment. As ever, there is so much going on in ROI tax. There is a couple of questions there. I'm going to give you a chance to have a little break, have a read of them, and you might type in an answer and get back to the person who's asked the question. Or if there's a particular trend, we'll be back to you at about 11:30 just to get your thoughts or something else you want to highlight. And yeah, that webinar on the 5th of May, I'm sure we'll share details on social media on different things as well in this, but yeah, definitely a very, very good webinar to attend. So thank you again. And I know you'll be staying on with us as well, but an excellent presentation. Listen, that's ROI tax. But Conal, I know the next session here we have something a little bit different, but again, a sometimes very complex area as well, and a difficult to understand area, investment business. And I know you're joined with Damien on this as well. So listen, over to you, Conal.
Thanks very much, Jeremy. Yes, indeed. Nobody ever said investment business was easy from any point of view. So it has developed a reputation of a bit of a minefield for practice, and rightly so in many respects. You're helping clients with decisions that they can make where they can gain or lose money. So it's something where you need to tread carefully. So I'm delighted to have Damien Cooper along from AccuVest to help me clear up some of the misconceptions people might have. But let's first of all, before we do that conversation with Damien, but before we do that, Damien, I just want to give people just a bit of an update on the regulations in the two jurisdictions that we're looking at. First of all, the Institute does issue investment business regulations for its members. These go back to 1999, they're when the first came into force, based on the Investment Intermediaries Act, the IIA. Look, it's fair to say that at the beginning, there was an awful lot included within investment business, the definitions we're talking about the Republic of Ireland now. So things like generic advice. For example, if you told a client that you need a pension and these are the various characteristics of the pensions that are out there, that was investment advice, and you needed, back in those days, you needed a investment business authorization in order to do that. Now, I think and that was the message that has got out there, and many people are still wondering, well, is that still the position? So just to clarify where we stand at the moment, okay, as best I can. Since 2014, corporate governance advice, so advice on people essentially dealing with their own businesses and buying and selling their own businesses and restructuring, that's not covered in ROI. Okay. Generic advice, telling people about the general characteristics of investments of all kinds, is not covered. So that is not a regulated activity. Both of those things and all things that we're looking at, anything you do for clients is covered by the code of ethics. So don't forget that. And that's what we're going to be talking about in the next session. But for now, talking about the investment business regulations is not covered. Okay. 2018, the Insurance Distribution Directive removed anything to do with insurance, that includes pensions usually, out from the investment business area. So it's not covered by the investment business regulations. Insurance, so for insurance, pensions, investments with an insurance wrapper are not covered. Okay. So that's what's not covered. Referrals. So therefore, if you make a referral to a broker for a pension, for example, or for life assurance, that is not an investment activity covered by the code of ethics only, which would include things like disclosing commission, by the way. So let's don't assume that you wouldn't disclose commission in those circumstances. Okay, so what's in? Okay, that's what's out. What's in? So you will need, if you want to make referrals to brokers or so forth, or others, or even other accounting firms or whatever, if you make a referral or an introduction for investment advice, that would be include advice on equities, deposits, wealth management generally, you need IA level, the lowest level of investment authorization for that. You need an IB1 level, a slightly higher level, if you want to give direct advice, as to actually advise on specific products, equities, deposits, bonds, tax efficient investment schemes. If you want to do that work yourself, tax efficient investment schemes includes EIS schemes. So if you're either promoting an EIS scheme or advising clients on that, then you're going to need investment advice there, or indeed advising them on private equities. So a private company, somebody wants to know, an outsider wants to know, should I invest in that company? That may well be covered. Okay, so if you have an authorization, there's a suite of compliance you need to comply with. I'm not going to go into that now, but important to remember, if you want to give direct advice, if you as a firm want to give direct advice on life and pensions, you would need central bank authorizations. What people have done is they set up separate firms to do that, because obviously it's a fairly complex matter to be authorized by the central bank, but most people don't, most people haven't. Okay, now, so that is very, very broadly. So if you have clients who need these sorts of services, if you have clients who have wealth, who have accumulated wealth, and need investment advice, then you may be strongly considering keeping your investment business authorization, because if you want to advise them on a suite of services that you may need to have, you may decide to keep your investment business authorization for that purpose. Okay, so that's the way I would put that. That's the Republic of Ireland position. The Northern Ireland position is, and just looking in terms of how many firms we're talking about here, about 260 firms have investment business authorization in the Republic. In mid-90s, numbers of firms have a DPB license in Northern Ireland. So similar situation to ROI, generic advice, corporate governance advice are not regulated activities, but you do need a DPB license to make referrals to brokers for all sorts, including life and pensions, as I understand it. Once again, there's a complex compliance regime, which we can go into another day, but not for today. But if you're regulated, you are regulated. If you want to give direct advice on equities, you cannot do that with a DPB license. You need FCA authorization. So once again, that's a whole nother matter to get that, and there's a DPB handbook there which you can look at. So that's broadly speaking the suite. So what I would say, what I don't actually mention there in relation on that slide, but just to bear in mind, is that in the UK there's also advice on private equities and consumer credit advice are also covered by the DPB rules, a separate area for consumer credit. So that's just a galloping tour of the investment business regulation, because what I really want to do is I want to move on to talk to Damien about the investment environment at the moment. So Damien is and I'll just move on. I just have a slide here, with our sponsors logo, which we're delighted to have a sponsor today, AccuVest. Damien is head of private clients and investments with AccuVest, and he's it's an Irish-owned investment, wealth and advisory firm, and their clients are pension schemes, individuals, companies, and charities. So Damien, you're very, very welcome. And tell us a little bit about Accuvest, Damien. Moving the slides too quickly here. Tell us a little bit about Accuvest, Damien.
Thanks very much, Conal. It's great to be here, and it's great to be involved in supporting you and the practice support team, I suppose, by sponsoring the practice news. We're delighted to be here, I suppose, to help provide support to the members who have needs, I suppose, of an understanding of investment markets, and of, I suppose, the environment that's out there for people, that the different providers that are out there in terms of how they can refer or who they can look to for help. In terms of Accuvest, just quickly, as you said, we're an independent Irish advisory firm. We're investment and pension specialists. That's what we've been doing for the 20 years odd that we've been in business now. The business is structured broadly in two divisions. We've got one institutional division, which caters for pension schemes, companies, charities, congregations, many of whom would be household names, and then we've got a private client business, which really looks at people and their families, and small businesses who have savings and investments that need to be managed. Between the two businesses, or between our two divisions, in total, our clients, we've got about 4.5 billion of assets under advisement. And really, I suppose, if I focus on the private clients side of stuff, because it's probably likely to be of most relevance to the members here, we work with accountants who have clients that need specialist investment advice. And I suppose how we help them and their clients is that we're a bit different from a main brokerage, because we have a depth of investment expertise that many of the brokers don't have. And in terms of our difference from stockbrokers or wealth managers, the accountants who refer clients to us are confident and happy with the fact that we are advice only. We don't sell products. We work with all the main providers, so all the main fund managers and wealth managers. We work alongside those because obviously people need products, and many of our clients, when they come on board, have lots of products, and some of them are very good. But really, how we add value is in providing context, and sort of giving people a plan, and sort of helping them have a context for which to assess investments, and filter the news that tends to get thrown at them about great products or great markets or market this, market that, investment opportunities, and filter that and sort of put a context on it and say, while something might be fantastic, a fantastic investment, it might not be fantastic for you. About striking that balance.
That's very interesting, and it's this is a service that people will value, because as we were talking earlier about this, you're saying that many of your clients will have investments they've almost accumulated over the years without a particular strategy, for example.
Yeah, and typically our clients, like we're working with people who have built up, wealth in their business, typically, either inside or alongside their pension scheme. So they either have wealth, pension assets, which typically have pension assets. They have some investments potentially inside or outside the business that have value in the business itself. And really, what they need to have, is a plan to look at, how do I get from where I am now to realization of my wealth? How do I manage it between now and then? Do I have a plan for exit? And so we need a plan for how I get there. And then once I start, looking at exiting, well, then I really need, how to invest that wealth, and how do I, how do I manage it and make sure that it's doing what I want it to do, rather than what product providers are telling me it should be doing, really. And that's really where, I suppose, our independence, the fact that we don't sell products, we don't manage money directly. We advise people on how it should be done, and we get them the best way of it being managed for them.
And that advice can be hard to find. That's for sure. I mean, as I spoke there, I mean, accountants north and south of the border are permitted to give generic advice to their clients, talk generally speaking about investments, which I suppose leads you to sort of two questions. One is how has the landscape changed over the past while? What conversations should you be having with your clients now? If you're their trusted advisor and they're expecting you to give a holistic service as an accountant, but what sort of conversations should you be having to raise that the awareness level of clients around the whole concept of wealth management, but also the prospects, looking out there, looking at the upheavals in the world at the moment, like how is this impacting on the decisions that clients should be making?
And it's a good question, Conal. And the really, the simple answer is that investments are complicated, and it's a constantly evolving and changing landscape. From an accountant, who is a trusted advisor to somebody, what they really need to know is that, I suppose, they need to be aware of stuff that's going on. But I suppose where we would typically come on board, either someone has a saving and investment need, in which case that's an easy solution. You just need to be saving, or they have a deep investment need, which is probably an ongoing requirement to manage. Our firm belief is that that investments and wealth, savings and investments that people have, like, they need to be managed, because they're typically a very valuable portion of someone's personal or business balance sheet, and really managing them is it means that you're more likely to get your outcome again rather than be drifting, and so so either people can manage it themselves, or they hire someone like us who would help them have a context and a framework for managing it. In terms of the investment landscape itself at the moment, coming into this year, it was tricky to start with with inflation starting to come up significantly, the prospect of high inflation, the prospect of interest rate rises coming through for the first time in a good number of years. That was a challenge on its own, and we saw markets drop off a good bit in January in response to that. No one was really that concerned about that, on the basis that investment equity markets in particular had returned 25+% last year. So if you give up a few percent this year, it's almost it's not that big a concern. It's a bit of a breather for markets. But then obviously, as we came into February, there was the heightened geopolitical risk, and then sort of the end of February 24th, we had the invasion by Russia into Ukraine, and obviously, that's a massive, as you said, it's a massive humanitarian issue, and it's a massive issue from that perspective. But obviously, from a business or an investment perspective, the implications of it are also very real and very hard to tell. And so we've seen a huge amount of volatility. Like, if I look at what the big things that we look at now, like the environment that we're in is significantly more uncertain than it would have been even at the start of the year. Like, we've got heightened geopolitical risk. Obviously, that war, we would hope that it might come to some conclusion, that there might be some way of peace being found. But there is also the risk that it will continue or potentially broaden. And obviously, on an ongoing basis, while it's going on, we have a food and energy crisis. We have the impact on economic activity. We've got lots of economic activity that goes on in Russia, Ukraine, or in that general area, which is being stalled, obviously, while there are bigger humanitarian concerns at foot. So we also have then the consumer uncertainty in that. So really what we have is a heightened risk of recession. We have an economy that was generally, I suppose, recovering, global economy that was trying to recover from COVID, and had been, I suppose, significantly strong recovery last year, and looking at, again, strong recovery this year. And then you throw a massive uncertainty like that on top of it. It's a real challenge. Obviously, from an asset class perspective, what we're looking at here is if you look at how would I invest, you've got equities, they're generally a key source of return for client portfolios. Markets There's a lot of upheaval in markets. They were down a lot early in the year, through January and February. They've had a good bit of recovery, actually. If you look at it now, equities are really only 3 to 5% off year to date. And in the context of having had such a strong year last year, it's not that, it's not that dramatic in the context of where we are. But so they're still going to be a key driver, and then you've got diversifying assets, property, private equities, infrastructure. They should all be there in a well diversified portfolio of growth assets for someone. If you look at what we would have normally considered safer assets like cash. Cash has been a real problem for a long number of years from an interest rate perspective, because we've had negative interest rates being applied. And now you've got this massive inflationary issue coming through. So even though the interest rates are starting to come up and nominally it's not as much of an issue anymore, like the spending and purchasing power of your cash is getting eroded at a significantly higher rate than it would have done, even over the last few years. So that's a problem for investors. And then you've got bonds, again, the returns on bonds are starting to come up. The yields are coming up a lot. You've seen, German bond yields, for example, go from minus 20 basis points at the start of the year to nearly 65 basis points now. So nearly a 1% increase in bond yields. But the prospect is of potential further in that, and any investors in bonds, in a rising interest rate or rising inflationary environment, bonds typically generate losses. So that's a challenge for things. So from when we're looking at it with clients, really, the really strong emphasis at the moment is that they need to have a plan in place. The plan needs to be forward-looking. It needs to be linked to their own objectives. They need to have an investment plan there, and then a strategy and sort of a framework that they have. And that having that at times like this, where uncertainty is heightened, allows people to rebalance and say, well, actually, despite the fact that I'm uncomfortable at the moment, I know I've got a medium to long-term plan. I know I've got some short-term needs, but I've set that aside and I've done the right thing by them. I've got them sorted, or I should at least have them sorted, or I'll sort them out. And then I've got my long-term nature and say, actually, at the moment, I don't know what the next week is going to bring, but I've got a good sense of, where I want to get to over the next 3, 5, 10 years. And then I've got a framework that helps me do that. I'm talking to somebody and hearing, are there any major reasons that I need to deviate from that plan? And at the moment, what we're telling clients is there aren't reasons to deviate from that plan. So to have that in place. I suppose what we really need to think about is, the reason that you have wealth general is that, it's an objective. It's not an objective in itself. It's an enabler. So it's what the purpose is, and having that in mind when you're looking at your investment portfolio and making sure that it's getting into the right place.
Very good. Listen, that's really sound advice. I think that clearly it's a time when accountants need to be reflecting on this. You need to be having conversations with clients along those lines, that they need to have a plan. And so forth. Accountants need to be very, very careful about being clear of what they can advise and what they're not permitted to advise clients on, and what referrals they can make and what referrals that they're not permitted to make. But I think that sometimes doing nothing is a strategy, but doing nothing in an uninformed environment is not clearly. So I would be advising accountants to reflect on those clients that they have who have investment needs or wants, and to, you are allowed to have generic conversations with them about the themes that we're discussing today, and that explanation is really helpful to us, Damien. So thank you very much. I think everyone can take something out of that for what they should be thinking about and doing next. Damien, there's a wealth of other things we could talk about. We raised the issue in our previous discussions about master trusts in pension schemes, for example, and to be careful, I think was what the advice you were giving there. But I think we're out of time. I can see Jeremy beginning to give me the look. So I think we're out of time now, but we'd love to have you back to talk about issues such as that, Damien, and to follow up perhaps on this and to see what we were saying then and that's what we're saying now. So So would you have any closing message for our members, Damien?
No, just quickly, touch very briefly on your master. You mentioned that that members will be looking at this, and they may be trustees themselves. Like what we're seeing a lot of in the current industry, in the current environment, is there's a lot of pressure because increased regulatory requirements on smaller schemes to try and move quickly into master trusts. And really, all we'd say is, if you're a trustee or an employee, or an employer, you need to remember that you have a fiduciary duty over the members of your scheme and your employees. So if you're making a change, you need to make sure you've at least asked questions, that something represents good value, that it's got the right investment choices, that you're happy that you've asked the questions, and then you've made an informed decision. And that's all that can be asked of you, but you need to make sure that at least you can demonstrate that, and that you haven't just been pushed into something where someone was selling something as a solution. And that's an important thing for people to remember.
Absolutely, it's really sound advice there for people. Anybody who's involved in any way with a smaller pension scheme where they're to amalgamate them into master trust seem to be a bit of a theme in the industry at the moment. So that's some good advice. Damien, thank you very, very much. And you'll stay on with us if there's questions. I
will, and obviously my email address is there, or even through yourselves, if there are further questions that anyone has, I'd be delighted to help out. No problem.
Great, Damien. Thanks very much. Jeremy, I'll pass back to you.
Well, Damien, thank you for that great presentation. Yeah, the regulation side, it's a confusing area. I see there is one or two questions there, Conal, and you might take a look at them and maybe type back answers there, or maybe we'll catch up again at 11:30. Damien, that's a very quick overview, but a very good overview as well of the investment market and what we need to be looking out for. And that's great. If there is anything, there's one or two questions maybe there for you as well. You might get typing, or we're happy to catch up again at about 11:30 after our next piece. And yeah, on to our next piece here. And I've titled this Ethics in Practice. Three words, but covering such a broad area. And firstly, just to introduce again, firstly, our Head of Ethics and Governance, Neil Fitzgerald. As Conal said, many of you here today from practice, of course, will be familiar with Neil. He was for many years working in practice consulting prior to taking up his role as Head of Ethics and Governance in 2017. And I'm delighted to be joined as well by Karen Flannery. Karen has worked in the Institute for a number of years, previously in our rep and technical team, but since 2018 has been working in professional standards as a head of projects. And of course, I'd like to thank Karen as well. A lot of the stuff I was talking about earlier in relation to audit regulations and so on, she has been working very closely on that over the recent weeks and months. Listen, firstly, Neil, Karen, you're very, very welcome to join me here today. And I'm going to kick off by, I suppose, firstly, just looking at the actual, just looking at your article, Neil, that you wrote in Practice Matters this month. And your first line, you say, and it's something we all sometimes can forget, you say that we all do in our annual returns confirm our adherence to the Code of Ethics. But I know, thinking back to my own life, even pre the Institute, perhaps we all don't have as wide a knowledge and as detailed a knowledge of the Code of Ethics, a very detailed document, and also the different supports and so on that are around there. It might be very good just to set out, I suppose, the landscape, the Code of Ethics, the details, and also, Karen, with you as well, I know the regulatory aspects to bear in mind in relation to the Code of Ethics. So, Neil, your thoughts on that, please.
Have we lost Neil? Neil, we have you.
Sorry, you'd think after all this time I'm able to operate a Zoom platform. Apologies. Hello, everybody, and thanks, Jeremy and Conal, for having me on. And yes, this important topic of ethics. No matter what we do in our lives, be you're an accountant or not an accountant, you cannot escape this one. Sorry, Jeremy, your question was in terms of the landscape of ethics and the context. Yeah. Well, I'm going to leave the kind of overview of the code for my colleague Karen, but just to give this a bit of context in terms of how it impacts professionals, you mentioned the first paragraph of the article calling out kind of how we're all supposed to sign off every year that we're familiar with the Code of Ethics, and we probably all tick that box. Surprisingly, a lot of the work that the ethics side of ethics and governance, if you like, has been doing has been kind of based on engagement with members and actually finding out what their issues are, what their level of engagement is with the Code of Ethics. And surprisingly, the most recent statistic is actually from research carried out last year with CCAB, that 82% of members who engaged with that survey would have read in full or in part the Code of Ethics in the last 3 years. Now, that seems to me to be a realistic measure. Nobody, and I'm not under any sort of pretense that nobody picks up the volume of the Code of Ethics, goes to bed at night and decides to have a good old read of it, okay? It's something that you refer to when is necessary, but it's actually essential, I think, more to be aware of what's in it so that you know when to refer to it, if you like. The Code of Ethics is one aspect of, I suppose, ethics in the profession. It's kind of what I like to refer to as the regulated area of ethics in the profession. It's akin to a code of conduct, if you like, whereas ethics to me is more about the fundamental principles, more about the dilemmas that members in practice especially will experience through engagement with their clients. You can get exposed to all sorts of things in life, and when you are the confidant or the advisor to many businesses and individuals who are experiencing high stressful moments at times, you can become privy to difficult situations, and there are dilemmas that need unpacking. The Code of Ethics might have the answer if it's a technical requirement or something you should or should not do, okay? But when it comes to the 5 fundamental principles, that's broader and requires broader consideration. When we did research on this, Jeremy, a few years ago ourselves, the Institute, we did extensive research on this. We had I was overwhelmed by the response from you might tell me the statistics of members in practice, but we had over 2,100 people engaged with this research a few years ago. And they reported the types of issues they were experiencing in their professional career. They were more kind of aligned with kind of unethical human resource practice, undue pressure influence, where they're pressured by a boss or where they're pressured by a client to do something they're not comfortable with. And that mightn't be unethical, the thing they're being asked to do, but it might be against their values, if you like. So that can cause a dilemma and cause kind of an issue. Dishonesty was something that people highlighted as something they come across quite regularly. Bullying and harassment, misrepresentation of information and manipulation of information, which, while serious, is something we could expect to come across. But I just said I'd call them out, Jeremy, because they're not things you'd find the answer to in the Code of Ethics, but they are the types of ethical dilemmas that 94% of our professional accountants are reporting to actually be enduring. Last year's research indicated that 27% of the respondents who responded to that survey, they indicated in the last 3 years alone, they've been put under pressure to act in a professionally unethical way. And then we deep dived a little bit into those respondents to discover that the toll that it took on, I suppose, their mental health and economic well-being as a result of those ethical dilemmas, anxiety, stress, depression, facing false allegations, losing clients, or being forced to fire a client, if you like, gaslighting, being asked. Like, there are real issues that can impact you in life. And again, you won't find the answers to that stuff in the code.
Neil, that's a very striking figure, that over a quarter of members surveyed, and I think I read that survey as well. I'm sure it was at CCAB or was it directly ourselves, have been impacted in this way. And of course, ethics is something that's so broad, and you've given some great analysis there. Karen, just, I suppose, touching upon it now with relation to our own Code of Ethics, and a very big document, I know, 5 parts, everything through from the general to the practice elements and so on as well. And I know you worked very closely on the development of the Code of Ethics back in 2020, but also probably day to day with relation to the regulatory side of things as well.
That's right, Jeremy. And I know that everybody listening here today has some awareness of the Code of Ethics, but as Neil said, that being truly familiar with the code is much more challenging, because it's such a large document. There's so much in there, and I think at times it can feel like there's a lot of rules and so on in it. But I think it might be useful to give maybe just a quick overview of the structure of the code and so on, just to reinforce some of that familiarity. It is a code based on the international IESBA code. So, the development from our perspective actually was really about just making sure that we reflected any very minor level of add-ons for the Irish jurisdiction. to make sure that they were appropriate in Ireland and indeed in the UK. And we've our code is the same as that used by other chartered bodies on the two islands. But you know, the main structure of the code is that it has as its core these 5 fundamental principles, and the fundamental principles are set out in a conceptual framework that can be used to draw upon when considering any situation really that has an ethical dimension. And I know Neil has given some scenarios where he said, well, this isn't covered in the Code of Ethics, and indeed many of them are not. And I can't imagine how many pages might run to if it did try to address every possible situation that people will come across on an almost daily basis. But I do think that part 1 of the code that sets out the fundamental principles and conceptual framework provides a very, very useful tool and a foundation, indeed the cornerstone of everything we do that Conal referred to earlier in the session. So I think there's something there for everyone and for every situation, but perhaps not every scenario is directly covered. The code then goes on and looks at some more specific ethical situations and a lot of the do's and don'ts, I suppose, but it's split into different parts depending on the area that the professional accountant works in. So there's a part for professional accountants in practice, another part for professional accountants in business, and indeed a part dedicated to insolvency practitioners. So in terms of making the code more accessible, sometimes it's easier to focus on the part that deals with the area of work that the individual is in. But again, in real life, a lot of ethical situations are very complex and can have a number of dimensions, and an accountant in practice might find herself in a situation where she's dealing with an issue in the practice, but she's also a member in business to the extent that, you know, she's running her own business and has employees and so on to consider. So there may be an extra dimension there as well. And I think some of the CCAB case studies actually look at that cross section as well. So that's very, very important. Of course, auditors. Sorry, go on, Jeremy.
No, sorry, you were about to say.
I was just going to say that auditors have even more to consider in the context of, you know, they have the ethical standards issued by IASA in Ireland and the FRC in the UK, and predominantly this focuses on independence requirements, and there's an awful lot in there as well to take on. And I suppose from a professional standards perspective, where we're focused on regulation and compliance and monitoring and so on, you know, it's really important for you know, to keep coming back to this cornerstone, and all members are required to comply with the Code of Ethics. There is that annual declaration of awareness of ethical obligations that Neil has referred to, and practitioners make a confirmation in relation to the firm as well in their firm annual return. The Institute's investigation and discipline function, as you know, receives and assesses complaints that often will have a breach of or a potential breach of the Code of Ethics involved in it. And our quality review team at times when they're out with practices may identify potential breach of the Code of Ethics. And the fundamental principle of professional competence and due care is one that can arise there sometimes. And when those situations arise, it can end up being referred to the Institute's Quality Assurance Committee for consideration, and, you know, for regulatory action where that's appropriate. And you know, that's all very necessary in terms of maintaining the reputation of the profession and ensuring that, you know, we all know what we stand for, really. A number of things as well have arisen in the last year, in terms of last year and a half, really. If you think of the ethical standard for auditors, both the IASA and the FRC code now include an obligation for firms who have identified a breach of the ethical standard in their firms, that they have to report that to IASA or FRC, where they're a PI auditor, or to the Institute in the case of non-PI auditors. So, you know, again, it's just becoming, there's more and more to think about all the time. And I think it's really clear that, you know, whether it's, you know, your day-to-day experience or when you're actually sitting down and thinking about your compliance, ethics just permeates everything that we as accountants do in the course of our work. And I think that's why it's really important to have this conversation. It's really, really important to you know, have access to the resources that are there mentioned on the slide, and that Neil, you know, lovingly cares for and make sure are up to date and is always providing information to members on. And these CCAB case studies that Neil was involved in the development of, I think they're really useful for, even just for starting conversations, for making the code more accessible, for helping people get more comfortable with it. And that's really, really valuable. So I'm hoping Neil is going to tell us a little bit more about
He is indeed. Thank you, Karen. As I say to you, that was a very good overview of the regulatory aspects. And you're right, there's so much there to think of. It's not alone our own code of ethics. There's also, as an auditor, you have the standalone codes. And really, it can be difficult sometimes to implement all of that regulation and put it back to real life. And that's why I know, Neil, these CCAB case studies for business, for practice, and so on, they're just trying to do that. They're just trying to make it applicable and to give you, I suppose, guidance on how you would apply in certain situations, common situations in practice. Listen, tell us more, particularly about the practice ones, but also give us an overview of the other guidance that was put out as well.
That's it, Jeremy. Just like something Karen said kind of sparked a thought. Like, the code of ethics actually is the common denominator of every professional accountant out there. We might all excel or have expertise in various different parts, but it's actually that code of ethics that binds us all together, if you like. And there's only really five fundamental principles there, which are 5 shared values, if you like, between over 30,000 chartered accountants in Ireland and members of Chartered Accountants Ireland, but also other professional accountants. It's an international community. The accountancy community is, and they are integrity, objectivity, professional competence and due care, mentioned by Karen, confidentiality, and professional behavior. They're not that actually hard to remember, and they are kind of shared values. If you go to the pub at night, Jeremy, and you sit down and you start arguing about the rights and wrongs of the world, how often is it that you'll get somebody that will share your point of view or share your values and stuff? Whereas here we have a collective bond, if you like, with all these chartered accountants in the code of ethics. So just struck me as Karen mentioned it. But listen, yeah, the case studies, that's exactly what they're designed to do. This code of ethics is quite a wieldy document, okay? It is a very useful and essential reference point for you. But we need to bring that to life a bit. So a lot of the resources that we have on the Ethics Resource Centre are about bringing the code of ethics to life, about highlighting the typical ethical dilemmas that people face, and sharing that information so that other people can learn from that. And they might look at the situation and say, well, I would have done that differently, or, okay, that's great. That's good to know how that person handled it. That'll give me confidence if I'm ever faced with that dilemma. And that's what the case studies are doing. In fact, the case studies are directly responding. The reason we've invested our resources to develop content like that is that's what the members asked for. True to life examples and case studies that allow them to consider ethical dilemmas in practical ways relevant to their own experience. I'm quoting there when I say that. That's actually was one of the findings of a common finding of the research I mentioned. There are actually sets. Karen also mentioned that you could be a member in practice, but you actually might also have a business, be part of a family business, or you might be a non-executive director on a charity or not-for-profit or some other organization. You might also have a role in the public sector. So there can be various hats that we wear as professionals. And it's worth noting that there are case studies there relevant to professional accountants in business. So if you're in industry and have a business, they explore ranges of issues, practical issues or dilemmas that people face, such as pressure to manipulate financial information and valuations, what you might do and how you might handle that situation, cutting corners, breaches of confidentiality, withholding information from auditors, God forbid, but how you might handle those situations, and it's quite useful. There's case studies there that tackle professional accountants working as non-executive directors, again, dealing with typical issues that those members might face, dealing with conflicts of interest in the board, pressure to make a decision on the board without the full or relevant information, breaches of confidentiality again, or maybe the organization just overriding governance procedures, etc. So real tangible issues that people have faced are tackled in that range of case studies. Working in the non-profit sector, there's case studies there, range of issues including, again, false accounting, false grant claims, dishonest and manipulative behavior, misstating performance information, again, overriding governance procedures in relation to procurement, all dealt with in those case studies. Professional accountants working in the public sector, range of issues that dealt with there, how you might result or how you might manage dilemmas resulting from political pressure, again, conflicts of interest, confidentiality issues, and following appropriate public sector procurement procedures. Or there's actually even a case study in there, God forbid, but there's actually a case study in there about intimidating the external auditor and how that might be handled. And then to bring us to why we're here today, professional accountants working in practice. Well, that's how those case studies are highlighted in my article. And they deal with a whole range of issues from staff performance, improper accounting by clients, conflicting clients' interests. And Jeremy, you mentioned earlier on about alternates, actually. That's actually interestingly and also a feature of that particular case study. How much to disclose to the finance director, and who's your client, who do you owe your duty to? All those dilemmas are dealt with in the suite addressing professional accountants working in practice. And what I'd say about them, Jeremy, is we could talk about each dilemma, and indeed each member here that's present could present many dilemmas. But what's common and useful about these case studies is to adopt that conceptual framework that Karen was referring to in the Code of Ethics. They actually use that conceptual framework to help the person with the dilemma to unpack that dilemma and deal with that dilemma. So there's a lot of value in that, because there's a lot of circumstantial and situational information that's necessary to resolve an ethical dilemma. So having an approach or a framework to address it is very, very beneficial. And as somebody who engages directly with members on ranges of ethical issues, I can tell you that that is useful just to have a framework to unpack the issues. And that framework includes considering of the 5 fundamental principles I mentioned earlier, which of them are actually threatened here, which of them are affected. And once you've isolated which ones are, then you start considering what the relevant facts are. And you kind of have to step back from a dilemma, which is very hard to do. Okay, very hard to step back from a dilemma when you're in a dilemma, but that's why you're encouraged as well to engage with trusted advisors. And most trusted advisors are actually friends, family, and colleagues, or former colleagues. You know, professional body rates very low when people tell us who they want to engage with when they have a dilemma. So again, you need to have the facts, gather the information, talk it through with somebody, and then start working through a resolution process and how you might manage it. A lot of solutions are common sense and practical. They're not grounded. The easiest dilemmas are the ones that actually you can refer to the code and it goes, no, you shouldn't do this. That's very easy to resolve because it's it's mandated for you. But the dilemmas are a little bit more complex and convoluted than that. And that's what the case studies do, Jeremy. They bring that to life and they bring to life the kind of real life issues that people face, the real feelings and emotions that people go through, and how you might actually arrive at a solution that at the end of the day, hopefully keeps you right with the regulator as well.
Well, Neil, that's what I really liked about those case studies. Yes, they give you the practical steps, the steps that are applicable in so many of these situations. Because, yeah, for most people, it'll be the first time that they will encounter, hopefully, one of these issues. And that they just really, it's difficult to step back and to, it can be a very emotive issue, as you mentioned, everything from bullying to every sort of thing as well involved. So they're great in that way. Coming back, I suppose, to some of the issues that we have at present, and we have only a few minutes now, as I say to you, and I know you have a guidance as well and different things to talk about, but some of the issues we're seeing at present, have you any particular thoughts or different things? I know I covered, of course, and your article as well on the Ukrainian situation, and I suppose there can be challenges as well ethically around such things as even return to the office, the COVID-19 situation, the actual sustainability and the challenges going forward as well. I'd love to hear in a couple of minutes if you had any viewpoints, either Neil or Karen, on those.
Yeah, I guess they're real live issues that are front and foremost in people's minds. I saw a question in the chat, I think it was directed at yourself, Jeremy, at the time. I think yourself and Colin mentioned about doing business with a Russian business owner. Again, that question was asked in the context possibly of sanctions, and it was answered in the context of, well, does that person is subject to any sanctions, and whether or not they're associated with the Russian regime, etc., okay, yes, that's the technical aspect of it. But actually, I wonder if, and I'm not calling anybody out, but I wonder if that person asked the question because there's a concern that, oh, this person's Russian, should I be nervous? It certainly prompted somebody to question, but there's an ethical dilemma there. And the types of issues we've been facing, for example, is we get a lot of questions, and it's not just me, by the way, it's my colleague Dee Moore as well in professional accountancy. And indeed, I know yourself and Conal have been front and foremost in helping with this as well. But you get a lot of questions about people, should I or shouldn't I deal with this individual who's Russian, or from Belarus, or is related to a Russian, or it's a Russian business. We've an awful lot of Russian money floating around Ireland. Just come out and say it, all right? There's an awful lot of Russian-owned hotels and businesses and stuff. Just because of that, that might create a dilemma for you, because you don't want to be associated. You don't want to have a reputation or have other clients leaving you because you're associated with somebody who's Russian. This is where values get challenged. And outside of the sanctions stuff, this is where values get challenged. It's like, well, no, I'm not going to discriminate against somebody just because they're Russian. I'm not going to just play party populist and just disown everything Russian just because. So you have a lot of ethical issues that come out from just that particular issue. Sustainability is presenting issues as well in terms of, I know in terms of sustainability reporting, everybody is wanting to do the right thing. Everybody wants to be green. Everybody wants to be sustainable. So we've greenwashing issues, risks, I should say. There's risks, high risks of greenwashing, and not deliberate either. People actually wanting to do the right thing, make the right decision, but consequently misrepresent something. So for example, oh, I'm sustainable, I'm giving myself a high score on my greenhouse gas emissions, but you're not measuring it the right way. So, you know, that comes out of professional competence and due care. So that's presenting ethical dilemmas. Kind of circling back again to Ukraine, I was dealing with an issue recently where there was it wasn't a practice, in fairness, it was a non-executive director I was dealing with of a business, and the business had advertised openly for jobs, had advertised positions, and it reminded me, God forbid, folks, I'm referring back now to donkeys years ago, no dogs, no Irish, you know, apply. So, but this job advert was Ukrainians only, you know, again, wanting to do the right thing, heart was in the right place, but there was an ethical dilemma presenting, oh, gee, you can't do that, you know, there's discrimination and equal opportunities and all that sort of stuff. So yeah, whole race of issues that can present dilemmas to people in different ways, and they mightn't necessarily think of it. The heart is in the right place, but that's the beauty of discourse. That's the beauty of resources like this here in the resource centre. They're informed by members' experiences. That's the beauty. Dialogue, reflection are all important when it comes to avoiding ethical dilemmas or dealing with them.
And Neil, as I say, you have got a great amount of resources there, as I say, in the links. And it's a live link in that previous slide there to your actual ethics resource centre. I know just in this slide here, the new case studies, there's a link there to that story on 31st of March. And it's also in Practice Matters in that link that we would have had earlier. The UK in crisis on the left-hand side here, the actual article you wrote and those ethical considerations I mentioned. And there's a link previous in the slides as well. Is there any other guidance and resources in 1-2 minutes that you have there? Because we are being asked there in the Q&A about your supports, and I know there's so much time and effort that you and Karen and others in the Institute and in the wider CCAB and CCABI have put in there as well. Is there anything else you'd like to highlight?
Yeah, if you move the slide on there, I think there's another slide that kind of highlights some of the other results. Like again, the whole idea of the Ethics Resource Folks Centre is to help you help yourselves. That's the idea of it. And it's also to recognize and acknowledge that, you know, the people that you will consult with on an ethical dilemma, because they can be quite sensitive and emotional, is probably a colleague or a former colleague or stuff. And indeed, of course, the Institute is here to help as well. We don't have a dedicated helpline or anything like that, but, you know, we'd always do our best to help, or at least point you in the right direction if necessary. Those queries can be directed to who you know best. But what I'd say to you is, don't wait for a dilemma to happen. And sorry, in that resource centre as well, there's a lot of different types of guides and resources. There's decision trees, there's information, there's case studies, there's a lot of food for thought in there. But the one resource one thing I'd ask you to consider is this one, is how to prepare yourself for an ethical dilemma. Don't wait for it to happen. This is non-technical. This is not kind of regulatory thing I'm telling you. So if you flick the slide there, Jeremy, actually, it's this little little one pager. When I left my beloved home of practice consulting, one of the first tasks I was given as the head of ethics and governance was to do a one pager on kind of the 5 fundamental principles and practical steps that somebody might take to resolve an ethical dilemma. So this is the result of that work, if you like. And the next slide then is that 5 steps. So when you actually think about this process here, you could do it in the 60 seconds it'll take me here to walk through it. But consider yourself as a person. What are your values? What do you stand for? Jeremy Toomey, Kerry Mann, what do you stand for? What do you represent, you know, in life? And what are you prepared to stand up for? What do you value most? You think you know, okay? But when you actually explore that and start questioning yourself, you know, family is important to you. Certain things are very important to you, and you have red lines. There are things you just will not do and lines you will not cross, okay? So that's kind of a reflection piece. Consider your cognitive development there is kind of an academic-y way, forgive me, of describing how you unpack issues in your head, you know, how you think about things, okay? Are you impulsive? Are you reflective? You know, what way do you think? Reflect on how you engage in ethical discourse. Have you got confidence to actually discuss with somebody that you have an issue? Can you put your hand up if you need help? And if you can't and you struggle with that, or you're shy, or you don't have that confidence, work on that now, because when you're in an ethical dilemma, you are going to need help. You know, you're going to want help. So know who your significant influence are. That's knowing who your trusted advisors. Who could you turn to tomorrow if you were faced with an ethical dilemma? If you were bullied or harassed, who would you go to about that? Is it your wife? Is it your husband? Is it a friend? Is it a family member? You know, who, former colleague? Who is it? Okay. It's good to have in mind. And like me in my network, there'll be different people I go to about different things, you know. There's no point telling my mother I lost a bunch of money. She just laugh at me. But I might go to my father and he might listen to me, you know. So there's different people that will deal with different things. And then the 5th point is kind of more representative of where you work, if it's a dilemma based in the workplace. So what is the culture of the organization? And how do you, within the organization, using the parameters that the organization has set out, how would you go about addressing it there? So if you've got an issue with your boss, if you've got an issue with your employee, if you've got an issue with a colleague, okay, what is the appropriate mechanisms within the organization to do that? And, you know, what is the culture? Because you might need to kind of shimmy one way or the other in how you address it, because some people might not be receptive to that sort of stuff. Some people might be open to it, and you kind of have to do that. So that's something you do. Don't wait for a dilemma for that to happen. That's something that you could unpack in your mind on the way home in the car this evening. You know, that's I think a good starting point for anybody. Prepare you for a lot.
I agree with you, Neil. It's there are 5 great practical steps that really bring into life. Listen, we're nearly out of time, but I'm conscious as well as Karen, you've been listening away there diligently. You might have some final thoughts in 30 seconds to share with us, and maybe you don't, and you're on mute. Actually, you're not on mute anymore. So Karen, if you do, great. If you don't, you don't. There might be things that'll come to you in 5 minutes time too.
No, look, very, very conscious that we are tight on time, but I suppose to stand behind everything that Neil has said, this stuff is all very real. It's all very real life. It's happening all the time. And as chartered accountants, we do have obligations to ourselves, to other chartered accountants, to the profession, to be conscious all the time of those fundamental principles that are in the Code of Ethics. And, you know, it's not necessary to think of it all in the context of compliance when you think of the Code of Ethics. Like, this is all very real. So just to say thanks to Neil for bringing the reality to all of that today. So that's really all I would have to say on that, Jeremy.
Well, I would like to say thanks to you both. Thanks to you both for actually that very quick tour of ethics, such a broad area, so much, but really you did help us to both set the landscape, but to bring it to life as well. There might be some questions there, so keep an eye out. But listen, we're coming towards our final piece. So thank you again, Neil and Karen, for joining us. We're coming towards our final part of the show, and this is a new part of practice news for us. I'm delighted to have a recording from our Northern Ireland tax lead, Leon Chadoran. And it's been a busy time in Northern Ireland tax as well, everything from the spring statement to a lot of the actual representations and lobbying that her team and the wider policy team, Crona included, have been undertaking with UK authorities. Chris, would it be possible for you to roll the tin? And Conal, leave a finger up.
Just wondering, just as to where we're at, would it make sense to take a couple of questions in the time and to say,
yeah,
say thank you very much to
you know what it might do. So if you hold on with us, as I say to you, Conal, have you some questions, sir?
Yes, I do indeed. We'll just hold that for a moment. I know, Damien, if you're still there, if you haven't left us, that you certainly answered one there on commercial property. So thank you very much for doing that. You were saying it was a protection against inflation, but not necessarily in the short term. I think that was what I took from that, which is very, very helpful. So what compliance requires when a firm refers clients to a pensions or investment advisor and receives commission in return? It depends is a simple answer. I'll just answer in the ROI context. If it is for pensions and life, it is not regulated, but you do need to follow the code of ethics, which is to tell people that in writing that you will receive commission. That commission, you tell them that. Also, that the investment business regulations, they're a great self-protection mechanism. So if you give them that engagement letter, say I am sending you to a broker who is going to advise you independently. That's good practice. Very hard to argue with that one. That if you make a referral in that context, if the referral is for investment business or as a general advice referral, then that needs to be you need IA authorization in ROI for that, and I believe you need a DPP license in Northern Ireland in order to do that. So, Damien, I hope that's more or less your understanding of the way the thing plays out there when people make referrals to your customers. I know it's a complex area.
Yeah, it is a complex area, and I suppose from our perspective, we are a MiFID regulated firm, and so from our perspective, if someone comes into us having been referred by a chartered accountant, which many of our clients are, we treat them we treat them all with equal care, but our job is to make sure that they're fully aware that they are an independent, they are our client, and we have no duty. So we have duty of care, obviously, to everybody who refers business to us, but it's our engagement directly with them. So
that's
there from our perspective. Thanks very
much, Damien. All right, I think there's another question along the same lines. I had a feeling that would come up, so we had actually discussed this beforehand, myself and Damien. And then are either Neil or Karen there in a personal capacity and not a working capacity. A builder wants cash payments for some building work, and I suspect not just to say what bank charges. You may be quite interested there. Look, I mean, I think we're back to personal values there, Neil, aren't we?
Yeah, I mean, look, where do you want to follow that one through to? You could design it. If he's putting it in his back pocket not to pay tax and to avoid bank charges, well, then you have a dilemma. If the person is just looking for cash flow purposes, what's the issue? So it's situational and circumstantial. We all know the risks with cash business. We just, I don't want to generalize by kind of going, everyone asking for cash is trying to dodge the tax, but I'll have Crone after me. That's not always the case. But you, at the same time, I see the member asking the question, you have to follow your instincts there as well in terms of your values and what you're comfortable with as well. So, very common one in Ireland.
Oh God, I'm going to be the building work done myself now. I'm expecting some offer like that. There we go. All right. Listen, Damien, thank you very, very much. I think we'll say thank you to you for coming on and your insights there into the world of wealth management and investments. And also thanks very much to Acuvest for your sponsorship. So I think we'll unless I think Crona has been answering some tax questions in the background there. I think we'll say thank you very much to Crona for that. Are you have you been able to answer what you need to answer?
Yeah, absolutely. I think I've answered all of them. A lot of them around the non-resident landlords, which obviously is a big issue. So, as I said, if there's anything further, please email us directly. But yeah, I've all them answered. That's
great. Thank you very much, Crona. No, so that's great. So. And we look forward to seeing you again soon, Crona. listen, and Neil, indeed, thank you very, very much for that. It's great to have you back, Neil. You were, as I say, a cornerstone of practice consulting for many years, and it's great to have you back and hear your insights and wisdom, indeed. So, listen, I think we'll allow all our guests to go on with their day now, and myself and Jeremy will stay on we'll be here to run this Leontia's piece on Northern Ireland tax. So Chris, if you could do that now, if that's okay, Jeremy.
That is perfect. No, that is great. As I say to you, I think this is a very informative piece for everybody in Northern Ireland, the UK. But even if you actually just have one or two clients, or even just a passing interest in the UK tax affairs, please do stay with us and catch Leontia's. It's about 15 minutes, her recording. It's a great presentation.
Hi there, and welcome to this UK tax update for the April 2022 edition of Practice News. My name is Leontia Dorn, and as you can see, I am the Institute's UK tax specialist for the Advocacy and Voice Department. I have over 25 years of experience working in tax. In fact, it's actually close to 30. And I'm here today to give you an update on the work that's been going on from a UK tax perspective for you as our members, and we will continue to work on these key things. So firstly, we'll be touching on the campaign to devolve Northern Ireland's corporation tax raising powers to the Northern Ireland Executive. We then move on to look at lobbying work in 2021, but also what's been happening so far in 2022. We'll then examine some of the key tax measures from the recent spring statement. We'll also touch on key tax changes that impact because of the new tax and financial year. And finally, we'll take a look at some future changes. Firstly, let's look at the Northern Ireland tax campaign. The really big issue on our agenda at the moment is the potential for Northern Ireland to have its own corporation tax rate. This really kicked off again last year when the Chancellor announced the increase in corporation tax from April 2023 to 25% from 19% for companies with taxable profits over 250,000. So that really brought the potential to switch on Northern Ireland's corporation tax raising powers, which is in the Corporation Tax Northern Ireland Act 2015, into sharp focus. A survey of fiscal devolution of our members last September told us that NI corporation tax is really the only game in town for our members, with 2 in 3 supportive of the Northern Ireland Executive pursuing the switching on of the legislation, and 9 in 10 of the belief that the rate should be less than the current 19%. So this was the basis of the Institute's submission to the Independent Fiscal Commission last October and its subsequent meeting with them in October 2021. Subsequent to that meeting, the Independent Fiscal Commission recommended in its December 2021 interim report that the Northern Ireland Executive should pursue corporation tax devolution and a lower rate for the region. Since then, the Institute has met with the Financial Secretary to the Treasury, Lucy Fraser, to seek HM Treasury's up-to-date position on NI corporation tax devolution and to ascertain if HM Treasury would be willing to consider flexibilities in the context of the impact of this on the reduction of Northern Ireland's block grant. So, for example, we're looking at measures such as whether the corporation tax receipts from service companies, which are no longer subject to EU state aid rules, could be excluded from the block grant reduction and other potential mitigations. The Institute also intends to engage with our local MLAs on this issue and will continue to pursue this objective going forward. Moving on now to lobbying and representations work. 2021 was a bumper year for the Institute's Advocacy and Voice tax team, with almost 30 formal submissions made to various government bodies, committees and commissions across the UK, Ireland and internationally. On the UK side, 18 formal submissions and consultation responses were made during the year, with a number of successes achieved, including the 1-year delays to both basis period reform and making tax digital for income tax, and the 2019-20 self-assessment deadline easements which were announced. The Institute also lobbied as early as last October for a similar easement for the 2021-2022 self-assessment deadline and discussed the importance of ensuring that this was announced as early as possible for our members, with an announcement then made at the start of 2022. So what's been happening in 2022? So far in 2022, we've made 6 submissions and representations on key UK tax areas, including the proposals on modernising the collection of tax debt, the rules for income tax registration, and in particular on the need for the government to provide small businesses with a soft landing in respect of the extension of making tax digital for VAT to the smallest businesses. So this took effect from the 1st of April 2022 and requires businesses to meet 2 key conditions for MTD for VAT. That is, they must keep their VAT records digitally and they must file their VAT returns using MTD compatible software, i.e. software that talks to HMRC systems. The Institute will also be making a submission to the current consultation on the UK's customs regime, and we would very much welcome your feedback in this area. We also met recently with the Office of Tax Simplification to discuss its ongoing review of simplification. And we continue to discuss EU exit matters with both local government and HMRC. And finally, it would be remiss of me not to mention the ongoing issues that I know taxpayers and agents continue to experience with HMRC service levels. This is a matter of ongoing discussion with HMRC, who previously promised to restore service levels to pre-pandemic levels by the end of March 2022. We'd therefore be very keen to hear your views on whether or not this has been achieved and on any ongoing areas of frustration or difficulty you're experiencing. Moving on now to the spring statement announcements from just a few weeks ago. Although we didn't expect any tax announcements, as the current government's tax policy making approach is to make these on budget day in the autumn, the current cost of living crisis meant that there were some unexpected changes. The main tax measures announced were mainly in the area of national insurance. Firstly, the Chancellor announced that from the 6th of July 2022, the primary threshold for Class 1 national insurance contributions payable by employees, i.e. the 0% threshold, will increase from 9,880 in 2022-2023 to 12,570 for the remainder of 2022-2023. The lower profits limit for Class 4 national insurance for the self-employed is set to increase to 11,908 from the same date, and it's expected to increase to 12,570 from 2023-2024. We also had some changes that impact self-employed individuals who have profits between the small profits threshold, which is 6,725 for 2022-2023, and the lower profits limit. They will not pay Class 2 national insurance from the 6th of April 2022, but they will be able to continue to build national insurance credits for the purposes of contributory state benefits. Also, from the 6th of April 2022, the employment allowance, which allows eligible employers to reduce their annual employer's Class 1 national insurance liability, subject to certain other conditions being met, will increase by £1,000 to £5,000. The Chancellor also announced that the 5% VAT rate on VAT on the installation of energy saving materials will be 0% until the 31st of March 2027, but only in GB. This does not currently apply to Northern Ireland, unfortunately, because Northern Ireland, remember, continues to follow the EU VAT rules on goods as a result of the protocol. However, the Chancellor did say that the UK government plans to discuss this with the European Commission. We also expect from April next year reforms to capital allowances and R&D tax relief, and although no significant detail is available on these aspects at the moment, we do expect the government to consult on this later this year. And finally, in respect of the spring statement, no changes were made to the personal allowance, which remains at 12,570 in 2022-2023, nor to the other rates of income tax and their bands. But the Chancellor did announce that he intends to reduce the 20% income tax rate to 19% in 2024, subject to certain fiscal conditions being met. Moving on now then to changes that take effect from the new financial or new tax year. The headline changes, which apply from the 6th of April 2022, are the 1.25% increase in national insurance contributions which was announced in September 2021 and applies to both employee and employer national insurance, in addition to Class 4 for the self-employed. From the same date, also from April 2022, the rate of income tax on dividends also increases by 1.25% in each of the basic rate, higher rate and additional rate thresholds. So those cash extraction calculations will need to be revisited, but also taking into consideration that from next year, we'll have a higher rate of corporation tax. From the 1st of April 2022, red diesel, that's known officially as rebated diesel and rebated biofuels, can no longer be used as they were previously. And this essentially means that many businesses in the construction industry can no longer use red diesel for most purposes. A number of new taxes also came into operation this month, including the plastic packaging tax and the residential property developer tax. Other notable changes from the 1st of April include increases in the national minimum and living wage hourly rates, the requirement imposed on certain large businesses to notify HMRC of an uncertain tax treatment, and the extension to the various corporation tax creative sector reliefs. From the 6th of April 2022, we also have a new requirement that companies must meet to be able to reclaim construction industry scheme deductions. This requires contractors who wish to reclaim these deductions via their employment payment summary, their EPS, to include details of their corporation tax UTR on the EPS. HMRC has also issued guidance on its new power to publish information about tax avoidance schemes. After Finance Act 2022 received royal assent towards the end of February, Section 86 of the Finance Act 2022 allows HMRC to publish information about tax avoidance schemes and about persons suspected of being promoters of such schemes. And finally, HMRC's new powers and penalties to tackle the form of tax evasion known as electronic sales suppression also came into effect when Finance Act 2022 received royal assent in February. Finally, let's move on to some future changes. Big changes are coming down the tracks in future. We've already touched upon the increase in corporation tax from next April. But looking at the new VAT penalties, which were due to commence from the 6th of April 2022, these have now been delayed 9 months and will commence on the 1st of January 2023. The delay to these penalties was actually a specific recommendation of the Institute in a 2021 letter to the Financial Secretary to the Treasury. Basis period reform is another significant change. This will mean that unincorporated businesses will be taxed on the tax year basis, and this legislation was enacted in Finance Act 2022. This was delayed 1 year, meaning the transitional year for this will be next year, 2023-2024, with the full reform taking effect from 2024-2025. HMRC has announced that it will be providing some limited assistance in arriving at overlap profits, which will be deductible in 2023-2024. And just note that both the delay to basis period reform and the provision of information on overlap profits were both key recommendations of the Institute in its summer 2021 consultation response to basis period reform and our subsequent letter to the Financial Secretary to the Treasury. So touching on the corporation tax increase in a little bit more detail, it actually turns out to be a 32% increase from 19%. So from the 1st of April, the rate increases by 32% from 19% to 25% for taxable profits of companies over 250,000. Remember that companies with taxable profits of 50,000 will continue to pay a corporation tax of 19%. This is to be known as the small profits rate. Companies with taxable profits between 50,000 and 250,000 will pay a tax at the main rate, but remember this will be reduced by marginal relief, which essentially will result in a gradual increase in the effective corporation tax rate the closer the taxable profits are to 250,000. And remember, each of these limits must be adjusted for the number of associated companies. So essentially, it's looking back at the old corporation tax regime that was in operation pre-2015, but with much lower limits for that main rate of corporation tax to kick in. And finally, making tax digital for income tax self-assessment is due to commence from April 2024, with HMRC expected to publish a roadmap this spring, setting out when different taxpayers can join the trial. This was originally scheduled to commence from next April 2023, but was also delayed 1 year as recommended by us. So that's giving you a flavour of the key changes. Just to mention, it's very easy to keep up to date with all the latest Irish, UK and international developments through Chartered Accountants Ireland's tax newsletter, which issues every Monday. We'd really love to hear from you at any time. If you have any questions on anything that's been covered in this update, or if you have any queries or issues generally, please get in touch with me, or you can always email tax@charteredaccountants.ie. We've also included the link there to subscribing to our Monday newsletter, and I would very much like to thank everyone for their time. And again, please do get in touch if you have any questions. Thank you.
Well, I would like to firstly thank Leontia for that very, very detailed presentation. She took the time to record it and prepare it. Just actually, sorry now, I see my video wasn't on. Yeah, just like to thank Leontia for that very detailed presentation, which she recorded just earlier this week on Tuesday morning. I see a lot of you have stayed on, and we'd like to thank you for that, and hopefully it's given you a very good flavour of what's happening. It's been such a busy period for UK taxes and so on as well. And we're going to make this a regular feature of our practice news going forward, covering off what is rapidly evolving, and particularly with the future changes as well, and just so many representations as well for Northern Ireland and for the wider United Kingdom. Listen, Conal, have we any further questions coming in or anything else as well?
Somebody asking there, can they contact Neil with ethical dilemmas? I think Neil would say we don't have an official ethics helpline, but he's happy to talk to people who phone him. Look, I mean, if your query is practice related, which it probably is, myself and Jeremy are also happy to talk to you about ethical questions. Certainly we've got a good framework there in which to place them. So we're always happy to do that. We're also free to contact us. Well, look, I think we would say thank you to everybody now at this stage. We think we've reached the end, unless there's anything else. I'm not sure that there is.
I don't think so, Conal. I just like to say, yeah, thank everyone, and of course as well, it's not alone who has joined us here today, be it Clona, be it Damien, be it Neil, Karen, and of course yourself as well, Conal, but also to thank the team behind it as well. So thank Chris, of course, our technical team, and the rest of the CP team, Linda, Paul as well, for all the coordination on the slides and different things. And I'm sure I'm leaving other people as well in our marketing team, Ginny, Ashleen, Bernie as well in our own team. So many people, and I always still leave somebody out, but thank you. And guys, thank you as well for sticking with us, as I say here. I know it's a long couple of hours, but we'll have the recording out as well in our YouTube channel in the actual coming days, probably by early next week. I imagine we'll have it out there. Always very popular as well, and you can actually get the past recordings too. We have a link on our actual practice hub of pages as well there to all the recordings. So we covered off a lot of, over the last 2 years, a lot of relevant areas, be they technical, be they practice related, and these things keep evolving. So please do check them out. And as Leontia even said in her own thing there, the practice, make sure you're signed up for 2 things. Your e-news on a Friday, be out about 1 o'clock today, but also your tax news on a Monday. And you can go in, as Conal mentioned earlier, and as Leontia as well, check out your communication preferences, and you make sure you tick your communication preferences for all of your practice consulting emails. A lot of people on the call here today, I'm sure, do that, but as I say, please do check it anyway, that you're getting all the relevant emails, and you will get in the tax news all of those representations, if you go back through the issues for the last month or two, that Leontia has been talking about there.
Perfect, great. Thank you very much, Jermaine. Thank you very much to yourself also for, as always, putting it all together. So guys, listen, look after yourselves, enjoy the rest of your day, enjoy your weekend. Until then, take care now. Bye-bye.
See you soon. Bye-bye, guys.